All right, everybody, welcome back to the podcast. I am super happy to have you here today. And I know I say that, but I have good news today. I've got something I'm excited to share with you. And that is about the interest rates. I'm a little late to the party, but that's definitely been the talk of the town in the real estate market, in the real estate world. So I wanted to address it in this episode. I know in the last episode, I said I was going to be talking about what happens when you make an offer and then you go to do the inspection or the appraisal, and that goes south. I still would like to talk about that in one of the next few episodes. I will likely be doing it in the next one. But with the good news about the interest rates, I wanted to make sure that you were aware of that and you knew how it might affect you. With that being said, I am releasing this episode on Christmas Day. I'm sure you're not listening to it on that day, on the day of Christmas. If you are, that's really cool. But with Christmas and with the holidays coming up, I did want to stress one thing. And this is something that I am also reminding myself of. It's easy to get caught up in our work. It's easy to feel uh, obsessed about what we're doing. Like we always have to do more. So I just want to make sure that in this time frame, I'm spending more time with my family and with my friends, and I encourage you to do the same. This is a special time where people you might not see as often are are back in town. People you haven't seen in years maybe are coming to visit. And I want to encourage you to just soak it in, take as much time as you possibly can to spend time with your loved ones, right? At the end of the day, that's what's most important. That's what you're going to remember in your life. So make sure you enjoy this time with your loved ones. You have some good food, you have some good laughs, and just make the most of what you have. So that's all I really had to say. Mostly a reminder to myself, but it's just important, and I thought I should share it. With that being said, let's get into this episode. We're going to be talking about where the rates are sitting right about now, um, talk about where they've been, or how it changes the market, and what's going to happen going forward. So, the current average of rates, let's talk about that first. I read an Investopedia article, and the article was from December 18th, so it might have changed slightly. It's currently December 21st at the time of this recording. But the title of this Investopedia article was Mortgage Rates Edge Up but Remain Near Lowest Level Since Spring. Okay, that's great. And then here's an excerpt from the article. Mortgage rate movement was mixed on Friday, December 15th, but the 30-year new purchase average remained near its lowest level since May, averaging 7.1%. Most other fixed rate averages gained ground as well Friday, while many adjustable rate products saw declines. So to break this down a little bit more, let's take a step back. It's been an extremely tough time to buy for several reasons. One, there's still not a lot of inventory on the market. Because of that, properties that are viewed as more affordable have garnered significant attention and become competitive very, very quickly. Additionally, because inventory is low, the prices of homes are still hanging high. And then, of course, we have the problem of interest rates driving up your monthly payment. So it's been a difficult time for buyers for those three reasons, right? For the low inventory, which leads to competition, the higher prices, and the higher interest rates. Although it's difficult to predict what's going to happen to the real estate market as a whole in 2024, these rate cuts are beneficial for you right now. And let's talk about why that is. And we'll use an example to do so. Let's say you're looking at a $300,000 house and you're putting 20% down. Well, if you were to buy that house on October 17th of this year, of 2023, when the rates were 8.45%, your mortgage payment estimate would be $2,261. Now, 2 months later, when interest rates dropped to 7.1%, your mortgage payment would be $2,037. That's pretty mind blowing. It doesn't look like much. That's not even a percent and a half change in terms of the interest rates. They haven't even decreased by 1.5%. And yet, in that 2 month period, your monthly mortgage payment would be $224 less if you bought it in December, if you bought the property in December. And that equates to $2,688 a year. Now, I don't know about you, but that would be nice to have that chunk of change in my bank account at the end of the year, have that extra money for whatever. So this change is pretty huge. It's affecting the market in a positive way, especially if you're a buyer. I would also like to add a little excerpt from a blog article on Realtor Magazine. And here's the excerpt. It says, higher mortgage rates increase the cost, while lower mortgage rates help with affordability, giving individuals more financial flexibility. Specifically, the monthly mortgage payment is $2,215 with a rate of 7.5%, while the monthly cost drops to $2,005 when the mortgage rate is 6.5%. As a result, the qualifying income decreases to $96,145 from $106,370. While the decrease in interest rate cuts is going to positively affect your mortgage payment, it's going to lower your mortgage payment, the necessary amount of money required to purchase a home of a certain price is also going to decrease. So I'm not exactly sure what price home they were using in this example, but that's awesome to see. Whatever the price of the home was, you used to, using typical standards, you used to have to make $106,000 to buy that home. Well, now you have to make $96,000 to purchase that same home just because the interest rates decrease. So this is huge. This is going to open up some more possibilities for buyers, and hopefully it's going to encourage those who were hesitant to sell to start beginning that process. One of the problems that I've heard from people, one of the reasons they don't want to sell is because they've locked in a lower interest rate and they don't want to give that up. They don't want to go buy a new property with a higher interest rate. So hopefully with the decrease in the rates, many people or some more people feel more inclined to sell in the near future. Now, what's next? What's going to happen in the future? Many experts predict that the rates will continue to decrease. So that's a good sign. Uh, there's an article from CBS, and it said that many experts agree that the rates are headed into the 6% range in the coming year. Many of the experts say now that the Fed has a better control on inflation and that the economy is looking like it's heading in the right direction, that rates may continue to decrease. Now, again, we always have to take this with a grain of salt. It's like the stock market. If we all knew what was going to happen, then that would be great. Unfortunately, we don't have a crystal ball. We can never predict with certainty what's going to happen. So always be cautious. Always be cautious of that. So I just wanted to make you aware of that. This is big. I wanted to talk about how it's going to impact you, what might happen next. And it's great to say that things are looking up for us. Next week, I'll continue the topic about the offers and negotiations and what happens when the inspection or the appraisal goes south, when problems arise. We'll talk about that. For now, like I said, enjoy this time with your family, enjoy this time with your loved ones. Whatever you celebrate, I hope you have a happy holidays and a great New Year's as well. Take care.